Greetings, everyone. This is Calvin Watkins, realtor with Keller Williams Legacy and with your new home. One of the biggest things we want to do with this show is introduce people to the home buying process. A lot of people are renting, a lot of people are leasing, some people don't rent to own, but we really want to introduce people to what it takes to buy a house, buy a home, and start building wealth as a homeowner. And one of the first things there are several things you need to do when you're buying a house, everything from checking your credit, putting some money aside, creating a savings account. And one of the most important things is making sure your credit is straight and making sure you have access to a lender, because having a lender, that is how you can buy the house, unless a lot of people are sitting on cash. I've seen some big houses, the $1 million plus, actually people make cash offers on. Investors are often making cash offers on houses, and they're doing what's called hard money loans. But today we're going to talk to the first-time home buyer, person who may be buying a second home, but this is for owner-occupied. So if you're buying a house, looking to move, we're going to help you find your new home. Bringing in a guest today, and I want to show you a little clip about her. So before we introduce her, so just take a quick look.
If you've ever dreamed of buying a home but you don't have a boatload of cash sitting around, you're probably wondering if you can ever qualify for a mortgage. Or do you already own a home but are not sure if you're in the right loan? That's where a competent mortgage professional comes in. Hi, I'm Bridget McGee, the Maryland Mortgage Mama. In order to get qualified for a mortgage loan, a lender requires certain information to help them to determine if you qualify and what type of loan will work best for your situation. The first thing you want to do is speak to a lender in your area. Finding a lender on the same page with you who has your best interest at heart will help the process go a whole lot smoother. You should expect the right lender to return your calls and emails in a timely manner. They should be available to answer your questions and provide guidance. You deserve to be educated on the process by a lender with integrity. When you choose to work with me and my team, our first discussion will include me getting to know you and your goals, and you getting to know us. We will discuss basic information about your income, credit history, and cash available for the purchase or the goals for your refinance. The next step will require personal information, including full name, address, birth date, and social security number. This will allow my team to order your credit report and scores. Often, the better the scores, the better your rate and the lower your fees. If your score is not high enough to qualify right now, it just means that we have some work to do before you're mortgage ready. There is hope, and together we'll get you there. If your score is already within qualifying range, congratulations, you're ready for the next step. Or as one of my clients put it, it's time to get financially naked. I said financially naked. You'll be asked to provide income and asset documentation, pay stubs, at least 2 months of bank statements, 2 years of W-2s or 1099s. Sometimes less income history and a proof of higher education will work too. There will be additional documentation required based on your specific situation. These might include divorce decree, personal tax returns, business tax returns. Remember, I said naked. While we get to know you personally, the underwriter approving your loan only gets to know you as pieces of paper that tell a story as to why you should or should not be approved. Our job is to help you tell that story with the right documentation so that it's easy for the underwriter to see that you're a good credit risk. Next, based on all of this and your comfort level for the monthly payment, we'll be able to help you determine which financial options are best for you. You are now ready to begin your search for the perfect home. If you'd like to get started on your mortgage approval, please visit my website and click on the Apply Now button. Take some time to look around. There is lots of great information for you there too. We'll get back to you within 24 hours to discuss your first step on your road home. If you can't wait, call me now. Bridget McGee, Maryland Mortgage Mama.
All right, guys, here you go. So let's meet the Maryland Mortgage Mama.
Well, hello.
Hi, how are you?
I am doing great, thank you. I'm happy to be here with you.
Yes, happy to have you. So let's talk about this. Who is the Maryland Mortgage Mama? When we just saw your video, it's pretty exciting, pretty well done, I might say. Who is
Thank
the
you.
Maryland
Thank
Mortgage
you.
Mama? Tell
Being
us
the
how you
video
got
guy, that's a high compliment. Yeah, I've been in the mortgage business about 20 years now. My brother, I started out with my sister who had a mortgage processing company. She and her business partner were kind enough to bring me on board and teach me the business. And then I had my daughter who I was able to bring to work with me, which was phenomenal. And then she got a little busier as she got a little bit older, and my brother said, hey, you can come work with me and bring her to my office. So that worked out really well. And it's more than a job. It certainly is who I am. And it's something that I really love doing, is helping people to determine what is going to make the most sense for them. It's not just a numbers game. It's really, what is going to really help these people to move forward.
Well, that's great, because that's one of the reasons why we do this show. It's called Your New Home, but not everyone is buying a new home. Some people are looking for investment property. Some people are looking for a second and third home. But the idea is to create a space where we can share information to help everyone, whether you go buy a $50,000 home or a $50 million home. But but one of the things that's really that really helps people I want people to understand is they can actually build wealth through home ownership. You don't have to have a six-figure income. You don't have to have a multi-million-dollar business. You can actually create and build wealth through owning a home. And that's what we want to talk about today. That's what we're talking about the show.
Yeah. There's so much to home ownership that it is building wealth is certainly very important, but the roots that it gives people to allow them to have that stability, to really literally take ownership and be able to figure out what they need to do to move their lives forward. I've shared my friend Reggie's story many times with his permission, and Reggie was one who, when he first called, he had been referred by an agent, and his credit was not good. He was not within qualifying range for very much, and he just kind of really decided that he wanted to be a homeowner. So the agent and I worked together and supported him along the way, encouraging him to get his credit straight, to do the things that he needed to do. And when he finally got to where his credit was, he was so excited. And I had asked him about where the money was coming from for the down payment. And at that time, I didn't have access to a lot of the first-time home buyer programs that I do now. And so he thought he was going to be able to get it from his dad. And his dad said that being a grown man, it was a good idea for him to figure it out himself. And so Reggie worked really hard and ended up purchasing. He did end up being able to buy his house. And it was really exciting to be at that settlement and to see the pride, not only in Reggie as the homeowner, but in his dad and his daughter. And Reggie has gone on since to write books. He's mentoring folks in his community. He is just doing so many beautiful things with his now family of 5 kids.
Wow.
And it's exciting to see when I knew that he got it, when he really got it, is when he called me and he said, I just wanted to let you know I canceled my trip to South Beach. And I said, oh my goodness, why? What happened? And he said, I've been working out in the gym for 6 months so that I could look good on the beach. And I realized that I would look better in front of my house with my keys.
Wow. I love that.
And I've told that story. I can't even tell you how many times. And every time I get teary-eyed, because it just is. It's so exciting. And that's when that light bulb went off. And that's when he really got it and knew that he had to change his spending ways, the way that he was dealing with credit, with all those things, to be able to really step in. And honestly, if his dad had given him that money at that time, I don't know that he would have felt it as deeply. And yes. It's a beautiful thing. He's a phenomenal guy, and he and his wife have just created this amazing life, and I'm really, really proud to be part of that.
Well, that's a beautiful story, and I think that more people would realize and live similar stories if they understood the home buying process more. And again, it starts with credit. So, how as a mortgage company, as the Maryland Mortgage Mama, how do you, when someone comes to you and they have a low credit score, first, what credit score would they need to qualify, and then if you could take us through those who don't have that qualifying score, how to build it up.
Okay. So most people that call me, if they're starting to look at homes, they really are, they look on companies like Credit Karma or, a lot of these consumer scores, and they end up being disappointed to find out that their score is not even what Credit Karma has told them. Because Credit Karma scores and companies like that are more, they use a different algorithm than the mortgage score. So they typically those consumer scores are going to be significantly higher than what we get. As a mortgage score, there are lenders out there who will lend down to, usually I think I've seen as low as 580 at this point. Not all companies do. Obviously it's a much higher credit risk when you have somebody that has some challenges with their credit. To qualify for any of the Maryland mortgage programs for the down payment and closing cost assistance, you really need to have at least a 640 credit score. And there are 3 credit bureaus. There's TransUnion, Equifax, and Experian. And the score that's used is the lowest middle credit score. So if you have 2 borrowers and one has a 700 score and one has a 500 score, we're going by that 500 score. So we need to figure out what we need to do to help that person to get those scores up.
Wow, that's a good point, because everyone uses Credit Karma. And I remember the guy talking about, I'm going to buy a car and I'm going to pull up my score on Credit Karma. The score that Credit Karma shows is like a vanity score or vanity score. It's not the actual credit score that you need to get a car. I even heard stories about, and this is something I really need you to sort of touch on, people who want to buy a car because they saved the money up. They went through the qualification process and they have so much money left over. They know they're going to get the loan. They've been approved to buy a house and they're excited. They got some money coming up. And one of the ways they want to celebrate is to buy a car. Tell us what's wrong with buying a car before you sign on the dotted line and walk out the door with your keys. So
don't buy a car. Don't buy a house. I mean, don't buy a refrigerator. I actually heard a story about somebody who on their way to settlement purchased a refrigerator on credit, and it knocked them out of qualifying. So it is really important that you work with your lender to determine where your qualifications are. I had one woman call me who said, remember what you told me not to do? I did it. And now I have, I just put a couch on order, and is that going to hurt me? So I never like to get those calls after the fact. It really is, for her, luckily it didn't make a difference, but for some of my borrowers it certainly does. And people are, they're getting these it's amazing to me when people call me and I say, what's your comfort level for your mortgage for a monthly payment? And they say, well, I don't want to pay any more than $900 or $1,000. And you look at their credit report and their car is $800 a month.
Yeah.
And so you've got to be able to when you make decisions for what you're doing in your future, you really have to decide what's most important to you, because otherwise you may end up living in your car for a while. So
right,
I'd rather people not do that.
Right. So how long does it take? When should someone? I think the Realtor.com has some information out, some statistics that say people really start looking to buy a house. They make that decision. They start the process 21 to 27 months before they actually do it. When should someone come to you, and how long does it take them to get their credit? I guess if that's a good question. How long is it? When should they come to you when they know they want to buy a house?
Well, I mean, I think it depends. It depends on the buyers. For the most part, lenders really should be one of the first phone calls, because you've got to know what you can qualify for. If you're qualified, we're going to pull the credit and figure out where you are. If we're going to talk about if you've had any derogatory credit. things that could affect your credit, like a foreclosure or a bankruptcy or a short sale that could affect when you can buy. So it's really important to really have that initial conversation. If you have a house, then, we need to figure out, especially in this market, can you qualify for the payment on the new house and the payment on the old house at the same time, so that you can make what's called a non-contingent offer. So
Wow,
if you're, and because this is a very, very seller friendly market, which makes it much more challenging for buyers. And if you've got a house to sell, you are less likely to win that bid if you're competing against somebody who doesn't. So we want to make sure that you can qualify for both, or that you're going to be able to sell the one before you buy the next.
Well, that's a great point. So my next question is, let's talk about rates. We always hear the Fed is dropping rates, and that is not necessarily the mortgage rate, but it is tied to mortgage rates. Can you talk about why rates are low, and why are people so excited about buying houses with low mortgage rates?
Well, we get that question a lot about the federal fund rate, and that they, when rates went to zero on the federal fund rate, the media says it's great time to buy. It's amazing. And everybody calls me and says, well, I've got a 3% rate. Can I get a 0% rate? I'm like, no, it doesn't work that way. The federal fund rate is actually the rate that the banks, when they're lending to each other, it's an overnight rate versus a 30-year fixed rate loan. So, it would be lovely if we could get everybody 0% mortgages, but the only way to do that is to pay cash, so you don't have a mortgage. But the rates are very low. In the last couple of weeks, we've certainly seen an uptick. They've probably gone up at least 0.5%, if not a little bit more in most cases. And that does change what somebody can qualify for on a loan. So, rates are, in they can be in the high 2s, low 3s. I've got some folks that are a little bit higher because of the type of loan that they're getting and their credit scores. So you can talk to people about rate. People who are a year out will call me and they'll say, well, what's your interest rate? And if I told them it was 0, it wouldn't matter, because they're not going to buy for a year. I have no idea what rates are going to be in a year. It's really important to find a lender who you feel comfortable with, who you feel confident in their ability to educate you and provide the information, as well as competitive rates and fees.
And it sounds like they could be really comfortable with the Maryland Mortgage Month.
I appreciate that.
Yes, absolutely. And that's also
check out my Google reviews. There's a lot of people who agree with you. So
that's great. I'm sure. I know we first met, I was excited to hear it. First of all, I love the name Maryland Mortgage Mama, and the fact that you are knowledgeable and you've been doing this business for a while. It really it says a lot. And I think that one of the things you said too is you can't predict the market. You can't say rates will be up now or 3 months from now or a year from now. It's really important that people if you're going to buy a house, start the process today. I have this thing I always put on Facebook every year, in the first of the year, a little quote that says, "A year from now, you will wish you started today." So start today. And
I'll tell you, like I said, it definitely is a seller-friendly market right now. So getting into a house can be certainly more challenging because there are multiple offers with limited inventory.
Yes.
But your rent is always going to go up.
Yes.
So you're gonna pay rent, and we just worked with a woman who had been renting for 19 years, I think.
Wow.
And her monthly payment was almost $2,000 a month on an apartment, 2-bedroom little apartment. And she ended up buying a house, and her payment is less than $1,200 a month.
Wow. So
and it's a full single family home.
She builds wealth. She saves $800 a month. She's buying a house, so she's building equity in her home. So whether she, not necessarily the $800 is discretionary income, but she has $800 to do something else with. If she saved it, she's saving $800. She's building equity in her house, and then years down the road, if that same amount of time was put into the house, there'd be a lot of equity in that. So that's
right. Well, and right now the equity is going up so fast because it's almost crazy, really, how fast the equity is going up. We actually just had a an appraisal done that was done as a conventional appraisal, where it actually needed to be an FHA appraisal, a little bit different. But when they had gone out the first time to do the conventional appraisal, the appraiser had used a property that was pending. So it hadn't settled yet. So they couldn't give as much weight. They didn't have all the information about it. By the time they went back out, that property had settled, and the value of the home had gone up $10,000.
No way. That's insane.
I mean, it just is. It's craziness. We have folks
crazy.
that bought last year that put 3 or 5% down, that now their value has gone up so much that their mortgage insurance that you have to pay if you put less than 20% down, or on a couple other types of loans, you have to pay it all forever. But it is, they've been able to either get rid of their mortgage insurance or drastically cut it back.
Wow.
So, I mean, it is, getting in sooner than later certainly makes sense, because these values, the talk is that the values are going to continue to go up. People say, well, in 2006, 2008, we saw this bubble and it burst, and it was horrible for so many people. And hopefully it's not the case this time. I think there's more common sense lending going on.
Yeah, that's what
there's less games. There's less requirements by the government of, you have to lend to people even if they really shouldn't be qualifying for a home. Where now it's much more, we really need to see those credit scores. We really need to see that job, and that it's going to continue. We're even doing verifications of employment right before closing, especially because of COVID. Jobs are shutting down. People are losing their jobs or changing jobs. And, so we need to verify right before closing that they actually still have a job.
Wow.
So, I mean, there's a whole lot of things that go into whether it's right. And, people say it's a great time to buy or it's a great time to sell. Well, it's really only a great time to buy or sell if it's a great time for you to buy or sell.
Yes. And I think that's an excellent point. Are you, and the biggest thing is start now. If you want to buy a home, if you've been renting for so long for any period of time, we encourage you to start today. Look at your credit score. Look at call a lender, call a mortgage mama. And again, what she said, the credit score that she pulls for a mortgage loan is different, way different than what you see on Credit Karma, way different than what you will see if you were buying a car. It's just two different pulls. And if you're going to buy a house, you need to have a mortgage company definitely pull a mortgage. So in closing, what can you kind of a little nugget you could drop with? Can they start today? Do they, what can we leave our audience with today?
Well, I think you definitely need to figure out where you are and what your goals are. I think you need to determine what a comfortable mortgage payment is going to be. And I think you need to determine whether or not using some of the programs that are available are going to be a good fit for you. So, there are first-time buyer programs. There's even programs that you don't have to be a first-time buyer for. But a lot of times those rates may not be in keeping, they're going to be higher than the going rate typically. But there may be some benefit. So, we've got to figure out where you're looking to buy, when you're looking to buy, and what your comfort level is for payment, so we can help to make sure that you are on the right path, that we can get you mortgage ready so that you can go out and fall in love with a house, because we certainly don't want you to fall in love with a house that you can't afford.
Excellent. And I love that, mortgage ready. That's great. Well, Bridget, hold on for a second. We're gonna stick around a little bit after the show. I want to thank you guys for watching us today. This has been Your New Home.
Thanks.
I'm Calvin Watkins with Your New Home, licensed realtor with Keller Williams Legacy. And well, thank you guys for joining us. Stay tuned. We'll see us next week. Now we'll be showcasing some properties. We have one we're going to be doing some filming on this weekend. Really nice. Really be showing you some dream houses. We're going to come into some investors about some houses that they can pick up, and just introducing you to a lot around real estate and some open houses. So stick with us. This is Calvin, and hope you join us next week. Thanks for watching.